Hey everyone, and welcome to my new video. Today we're gonna be talking about Salesforce. The ticker symbol is CRM. And actually I've been watching this stock for a while now, and in this video I walk you through a full deep dive analysis. And as you can see from this chart, the stock's been down more than 20% since the start of 2025. And that's actually a bit surprising, especially considering Salesforce has delivered strong financials results and it's investing heavily in AI. So, what's really going on here? And more importantly, is the stock overvalued or overpriced right now? Let's dive in and break all it down. Okay, before we dive in, I want to give a quick shout out to StockUnlock.com for sponsoring this video. You'll be seeing a lot of amazing charts and insights from their platform in just a moment, and honestly, it's one of my best tools for breaking down stocks. And for anyone who's not familiar with the company, Salesforce is a cloud-based platform that helps businesses manage everything related to customers. Okay, we're talking about sales, support, marketing, and even data analysis. And since it's a software as a service product, there is nothing to install. It's very important because companies just log in through their browser and get to work from pretty much anywhere. And one good example is Adidas. It's one of Salesforce's major customers, and they use Salesforce to make the shopping experience more personal. So, when you're browsing, Salesforce tracks what you are interested in and helps Adidas send you relevant offers, manage your orders, and give you fast customer support, and all in one place. That's very good. And what makes Salesforce really unique is the App Exchange. Yeah, it's like an app store, but for business tools. Just like you download apps on your phone, companies can add features to Salesforce, like e-signatures, invoicing, or surveys, without building anything from scratch. That's very important. For example, if a business needs to send e-signatures, they just install an app and it works right away with Salesforce. That's a big advantage. All right, now let's move on to the financials. And as always, we'll start by breaking down the revenue. And I pulled this slide from their last quarterly report. And it basically shows how Salesforce is doing across different parts of the business. Yeah. So let's go through each revenue stream here. And I'll share my thoughts along the way. Okay, so first up, we've got Sales Cloud here. And this is one of Salesforce's main products. It helps sales teams manage leads, contacts, deals, and forecasts, and basically everything they need to close sales. Yeah, think of it like a system that tracks every customer from the first message all the way to signing the contract, right? And a big recent driver here is Salesforce's push into AI, especially tools like Sales GPT. If you ever heard about it, it's like it can write emails or suggest the next steps. And now looking at the numbers, growth in this segment is slowing down, as you can see. And in the last quarter, revenue grew by just 7% compared to 9% the quarter before and 11% a year earlier. So it's not so good, yeah, we can say. Okay, now if we zoom out a bit, since 2020, Sales Cloud has grown at an average of about 12%. Here, as you can see, that growth has been slowing down over time. Just look at this trend line. Yeah, it's going down. So the big question is, what's going on here? Well, there could be a few reasons to it. Maybe customers are spending more cautiously, or the market is starting to get saturated. Yeah. It could also mean that the competition is picking up, which is a worse scenario, or that the impact of their AI investments is taking longer to show up. It might be also possible. But either way, I don't like seeing this slowdown, let's say. It's definitely something to keep an eye on. Yeah, it's kind of concerning. Okay, next part of their business is actually Service Cloud. And what's this? This is what powers customer support across channels like chat, email, phone, and more. So when a customer reaches out, support agents can instantly see their full history and respond faster and more effectively. And the standout feature here is something called Agentforce. It's basically a supercharged AI assistant, and it can ask a question, summarize customer issues, and suggest what to do next. And the crazy part is that it even replaces part of what a human would normally do, which is insane. And this is actually Salesforce's biggest part of revenue, and the growth trend here looks pretty similar to Sales Cloud here. Yeah. So it's the same. It's slowing down a bit, so definitely something to watch. So you can also see this from a bigger picture view here on StockUnlock.com. And this trend is decelerating. Does this mean that AI tools like Agentforce aren't really driving revenue yet? Well, not quite. Agentforce is starting to gain real traction, yeah, but the big revenue impact is probably still ahead. I actually went through their last quarterly report, and there was a mention that 30% of Agentforce bookings and 50% of Data Cloud bookings came from existing customers. So that's a solid sign that current users are expanding their use of Salesforce AI. And also, since launch, there have been over 8,000 Agentforce deals, and about half of them are paid. Yeah. So it's early, but it's clearly moving in the right direction, and definitely something we want to keep an eye on. Okay, and next part of their business, platform and other. And what does it mean? Okay, it covers tools that help businesses build custom apps, automate tasks, and collaborate without needing to be tech experts. Yeah, so this includes things like low-code tools like Heroku and the App Exchange. So, for example, a company could use Salesforce to build, let's say, its own internal HR system with very little coding. The big driver here is how automation, AI, and Slack are being backed into daily workflows. I won't go too deep into this one, but it's worth noting that the trend here, as you can see, the trend here is actually accelerating with 40% year over year growth. And if we zoom out here, we can see that this part of revenue business is starting to catch up, actually showing signs of acceleration here. As we talked about earlier, the app exchange is still expanding, and that's definitely a good sign. So next we have marketing and commerce, and the easiest way to explain this is with an example. So imagine someone browsing shoes on a website. Yeah, let's say it can be anything, but let's say shoes, okay? And then the next day they get a follow-up email with personalized suggestions. That's what these tools do actually, yeah? So they help in some way businesses boost engagement and drive more sales. Yeah. And now in the last quarter, growth in this segment was just about 4%, which is not so good year over year. And if we zoom out actually and look at a bigger picture, there's a clear decelerating trend. Yeah. So this is a bit concerning, I would say, and there could be a few reasons behind it actually. The market might be maturing, strong alternatives are out there, and companies might be shifting their tech priorities. Yeah, there might be many things, that are influencing this kind of decelerating trend. But I don't know, it's my guess. And all of that seems to be putting pressure on this part of the business. Okay, and the last one I want to talk about here is integration and analytics, which includes MuleSoft and Tableau. And MuleSoft works like a digital connector. Yeah, it links Salesforce with other system a company already uses. Yeah, like their website, billing software or third-party apps. And that way, all the data flows into Salesforce and works together seamlessly. Yeah, and then there is Tableau, and which takes the data and turns it into clear interactive dashboards. Yeah, so it's more visible, and it's like super helpful for making smart data-driven decisions. And this part of the business is becoming more important, especially as AI tools like Agentforce need clean, connected data to work well. And finally, some good news here. Yeah, we're seeing 10% year over year growth, and this segment now makes up around, as you can see here, it's around 15% roughly of Salesforce's total annual revenue. And if we zoom out this part of the business, we can see that this part is actually catching up here. And the trend now seems to be picking up speed. There are probably a few reasons behind this, because more and more companies are trying to connect all their systems, analyze data faster, and get AI ready. And that's exactly where tools like MuleSoft and Tableau shine. Okay, so overall, the business has been slowing down, as you can see from their overall revenue. So what's going on here? Well, I went through their last quarterly earnings, and Salesforce's management did talk about this actually. In their Q1 fiscal year 2026 earnings call, CEO and CFO actually addressed that slowdown. They acknowledged the shift, moving from those strong double-digit growth rates to more modest single-digit growth. That's concerning, I know. But they also made it clear that this is actually a part of their long-term strategy, and the focus now is on big growth drivers like AI and data integration, And Benioff also talked about the new unified enterprise AI platform. And so what this kind of platform mean? Instead of having one AI for sales, another for customer support, and a third for data, Salesforce is now connecting it all into one smart unified system. That way, everything works together more efficiently. Okay, so what about Salesforce competitors? Well, leadership is actively positioning the company as a frontrunner in AI integration within the CRM space. And to get a clear picture, I pulled up some of Salesforce's biggest competitors and compared them using one of my favorite metrics, operating margin. Why I chose operating margin? Because it shows how efficiently a company turns revenue into actual profit from its core business. That's important. Let me say it again. It means from its core business, without being skewed by taxes, interest, or one-time items. It's a really solid way to compare software companies head to head, actually. And as you can see from this chart, Salesforce is competing with tech giants like Microsoft, Oracle, Adobe, SAP, and HubSpot. And Salesforce improved its operating margins, to around 20%. But as you can see in this chart made with StockUnlock.com, they are still behind. And by the way, what I love about StockUnlock is that it pulls all the key data together in one place, so you can easily compare companies side by side. It's a big advantage. So for example, Microsoft is over 45%, as we can see, Oracle at 32%, and Adobe around 36%. And even SAP, isn't far off. And one thing that is very important and keep in mind, those companies, we are talking about Oracle, Adobe, SAP, and Microsoft. Those companies run huge diversified businesses, and CRM is just one part of their puzzle. So Salesforce, on the other hand, is all about CRM. They lead the space with around 20% of the global market. So even if they are not the most profitable yet, they've got a strong grip on their niche. And the real challenge now is scaling smart without losing that lead. All right, and before we jump into the valuation, I want to give you a quick overview of Salesforce Fundamentals. And this is exactly where StockUnlock.com shines. They've got a really useful tool called the Insight Score. Here. And, it rates a stock from 1 to 5 across key areas like profitability, growth, and financial health, with 5 meaning strong potential and 1 meaning weak potential. And it's a super simple way to get a clear snapshot of how a company is doing overall. So, starting with profitability, gross margins here are solid and super steady, as you can see from this chart. It's been around 75% roughly. Now it's sitting at 77. So it's good. But operating margins, as we could see earlier, these are on the other hand are just average compared to peers. Not bad, but not amazing either. That said, the free cash flow margin is sitting at 32, which is super impressive. And this thing is basically a cash machine. Yeah. And I'll definitely be watching those operating margins here. Yeah. Going forward, I want to see them improve. Okay, next we have return on invested capital, and this is sitting at around 11%, which is actually, in case of Salesforce, a really big sign of improvement, especially when you compare it to their 10-year average of just 3%. Yeah, so that's a huge improvement, as I said before, and I really like seeing that kind of progress. Okay, and when it comes to growth, we already talked about this. And the slowdown in growth is a bit concerning, I would say. And honestly, I don't love seeing that. It's definitely something I'll be watching closely. Okay, and regarding financial health, you can see the current ratio of around 1. It's not so bad. And if you look at this chart comparing total debt to cash, Salesforce actually has more cash on hand than that. Yeah. So technically, they could pay off all their debt tomorrow if they wanted to. So there are no issues here. And as for share count here, yeah, as you can see, it's recently gone down, which is nice, but the overall trend has been up over the years due to stock-based compensation. Here we can see that in this chart, and I really don't like that. Yeah, and I'll be keeping an eye on whether that recent decline continues. Yeah, and finally dividends. Yeah, the free cash flow payout ratio is sitting at around 30%, which is decent, but personally, I'd rather see them reinvest that money back into the business, or at least buy back more shares. Yeah, especially now that the stock is trading lower compared to where it's been in the past, so that could be a smarter use of capital. But as you can see here, from this insight score, analysts have been bullish recently. So the overall score is almost 4, so it's good. So what's the takeaway from all this? Well, growth is clearly slowing, no doubt about it. But on the bright side, profitability looks pretty solid, especially free cash flow. Yeah. And that said, operating margins and shareholder dilution from stock-based compensation are two things I'll be watching closely moving forward. Okay, and now let's talk about valuation. And just to be clear, yeah, I won't be relying on net income or free cash flow to value Salesforce. And here is why actually. Salesforce has historically had high stock-based compensation, as we could see, which can make profits look lower than they actually are. Yeah, that's one thing. And on top of that, they've invested heavily in acquisitions and product development, which can mess with the free cash flow picture. So instead, I'll be focusing more on operating cash flow because it's a clear way to see how much real cash the business generates from its day-to-day operations without the accounting noise. Okay, and I pulled up this chart for you comparing the price to operating cash flow ratio across Salesforce's main competitors. And guess what? Salesforce actually looks like one of the cheapest in the group right now. And at the moment, this ratio is sitting at around 19, while the 5-year average is closer to 27. That could mean the stock is undervalued at today's price. But of course, yeah, it all comes down to future growth and what the market expects going forward. So I run a simple DC evaluation here on StockUnlock.com using a 5-year projection of operating cash flow. And by the way, if you've been enjoying the charts and the data in this video, they all came from StockUnlock.com, as you could see, and I seriously use it every time I analyze a stock. And you can try it out too. Yeah, there is a 10% discount through the link in the description. And it even comes with a 30-day money back guarantee, so no risk at all. And, it's a great way to support the channel while upgrading your own research. So at the same time, just check the reviews and by yourself and make your own decision. Yeah, it's up to you. All right, back to the analysis. As I mentioned, I'm using operating cash flow here. For this valuation, you can actually choose from a few different options on the platform. But for what we are doing here, this one made the most sense. Yeah, operating cash flow. And here's how I set the valuation. So for the growth rate, I used 10%. That's actually the low end of Salesforce's own guidance, yeah, which is between 10% and 11%. So yeah, This is a pretty conservative estimate, but just keep in mind that their 5-year average, here I can show you, their 5-year average of operating cash flow growth is actually closer to 26, yeah. So I'm playing it safe here. And for multiple, I went with 20 actually. And their 5-year average is around 27. Yeah, but the current market multiple is about 19, as we could see. So I think it's a more realistic and cautious assumption. Okay, and I also set my usual 15% margin of safety, which is the minimum return I aim for. Okay, and based on those assumptions, as you can see, the model shows around a 10% annual return over the next 5 years. So to me, that suggests that the stock could still dip a bit further, and I'll be keeping an eye on the stock. And if it drops, to around $211 per share, and nothing has fundamentally changed, that's very important, I'll be buying some shares. So that was my DCF analysis. And as we discussed, Salesforce's stock has been down in 2025. And even though the company reported strong profitability and cash flow, yeah. So what's holding the stock back? Well, growth is slowing, with revenue expected to rise just 8 to 9% this year, down from double-digit growth seen in the past. And there's another factor, because investors are also unsure how quickly Salesforce can turn its big AI push into real returns, meaning the AI agents. And the 8 billion Informatica deal raised concerns too, yeah, with some seeing it as another case of buying growth instead of building it organically. While acquisitions like MuleSoft and Tableau worked out well, others like Slack haven't lived up to expectations. Add in a few analyst downgrades and market skepticism, and you get a stock that's steady but not taking off. So, like I said earlier, there are definitely a few things to watch here, but if the price hits my target, I'll be buying the stock, yeah. And of course, I want to have a solid margin of safety before jumping in. But hey, that's just my take, my opinion, and as always, make sure to do your own research and let me know in the comments below what you think about Salesforce. I'd love to hear your thoughts. Okay, so that was my take on Salesforce. If you found this video helpful, please make sure to hit the like button, subscribe, and as always, thanks so much for watching, and I'll see you in the next one. Bye.